All right, weekend market update time. Excited for this one. We're going to be looking at Bitcoin on the high time frame, USDT, DOM. I've got some really interesting comparisons in terms of the overall thesis of what I believe is going on here, what's been going on for the past 4 years. And I see a couple things that show up in the Bitcoin or USDT dominance chart that also illustrates my point in a different manner. Hope it's not confusing because it's a little complex, but I'm going to share it anyway. SPX, dollar, 10-year US oil, and that's it. Try to keep this update under 20 minutes. With that, let's jump into it. So the high time frame chart that's been our guide essentially for the last 4 months is the chart that's in front of us, the weekly chart of Bitcoin. Last week, I believe I mentioned in the update, let me zoom in, that for all intents and purposes, we're in a vertical accumulation channel, and that any pullback inside this 101 range is completely normal in the context of a vertical accumulation. Or 1, 2, 3, 4, 5, 1, A, B, C, 2. 3, 4, 5 is kind of the way I'm looking at it. With the members, I did put out a video in terms of low time frame expectations, looking for this type of move as a reason I de-risk personally some leverage stuff I had in the miners, the initial capital that we put on in April. Now, with all that being said, I'm not a financial advisor. I'm here to give you my convictions and my ideas. I could be right, wrong. The markets could go up, down, sideways. Right? The market's going to tell us at the end of the day who was in fact correct. But with that, we're gonna jump into it. And so there isn't a lot of room here, unfortunately, for the sideline participants or the bearish participants. There isn't a lot of room here for them. We've got the 30-week moving average up, and that's been our guide. We've got the Ichimoku cloud, and that's our guide. And we started making some space between the 30-week and the candle, the bottom end of the candle here, since our big push off in early May. Why I say 101 is my lowest, my opinion on the lowest that we would deviate into this range, this vertical accumulation range, is the character of an early stage expansion and my expectation that this space wouldn't be violated. That's healthy. Participants should not be rewarded for missing these entries, and participants should not be rewarded for missing entries, right? Entries. And it's very clear that participants have missed a lot of entries. With every move down, I now see a chart that references on X. I see a chart that references the what is it? The double top from, yeah, this one I think. This is the new chart. Double top, right? Okay, something like that. And this is maybe that's a chart. I don't know. And we got to go down. A lot of large accounts are bearish here, which this is very good. We want that. We don't want bullish behavior. We do not want bullish behavior from the trader types, as we continue to get volatility along the way. It never ceases to amaze me that let's say something were to go in this direction, and this is the path. People getting bearish here is the reason why it ends up doing that, okay? If everyone was bullish here on these pullbacks, everyone was bullish, it likely wouldn't do that, right? That would likely be early signs of distribution. And so pay close attention to if my targets come to fruition, if we start moving like I believe we are into this parabolic phase, which I believe is next, when this should be a buy the dip crowd, okay? And the market rewards, or the market in a parabolic type phase will reward early mistakes to condition the market, okay? And this is all speculation. I have no idea if this is what Bitcoin is going to do. I think this is what it's going to do. And even if in a pullback scenario, what I mean is the first major pullback after this expansive phase continues. This is the trend, folks. Mind you, after a reaccumulation, this should get people really bullish. This should get people. We should hear buy the dip in this. We should hear buy the dip in this, and then that's rewarded, and then it goes on forever. Okay, then the market now conditions us that, because the market hasn't conditioned anything right now. The conditioning now is completely the opposite of what you'd expect to see where we are. We're at $104,000 Bitcoin, and we hear tops, any type of volatility, we hear top talk, and there isn't much bullish engagement or sentiment to be found from a social media perspective. And I don't necessarily follow the fear and greed, but I mean, like, let me get rid of this. Like, here is our this is our monthly chart. Let me put it in line. That's our monthly chart online. So we made, an all-time high monthly close. And so we're not at that phase, in my opinion, where we should be looking for any type of material, anything. It's the opposite. We should be looking for material upside, given we're now consolidating above 1, 2, 3, 4, 5, 6, 7, 8 wicks that were rejected. Now we're gaining price acceptance as a floor there, and so I'm looking for continuation. Another major difference, okay, between, let's look at the comparison I wanted to make here was this, okay? What's a major difference between this phase back in 2021, okay, expansion, and then what I'm claiming is a corrective move into all-time high. There's a distinct difference between these two phases and what's going on here when you look at USDT dominance. And this is the aggregate percentage of stable coins in terms of tether, the stable coin tether, percentage of tether in the ecosystem versus on the sidelines in the stable coin. So the more that's on the sidelines, the less that's in the crypto ecosystem, theoretically the prices are lower, right? The less percentage on the sidelines, the more that it's then put into the ecosystem, the higher the prices. And we see this correlation show up in price. What do I mean by that? 2021 Bitcoin high, okay? What did USDT dominance do? Downtrend. What do I have up here? I have the 100-day simple moving average in red, okay? Simple moving average. This is a rising simple moving average. This is a rising simple moving average. So in spite of increased overall percentage of stable coins, coming in and out of the ecosystem for a long time, this was a bullish trend for stable coins percentage in the marketplace. We deviated under that 100 simple moving average, came up to the top of this range. Okay, this is the range. Rejected, and then Bitcoin made another all-time high, but the percentage did not make a new low. Okay, that should have been the clue back then. Talk about learning, right? We every day we should be learning something and apply it to forward thinking. And here, this was a classic tell. This should have made a lower low if, in fact, that was a true Bitcoin all-time high, but it was corrective, in my opinion. And so it made a higher low. Clue number one. And it reclaimed the 100 simple moving average and then bullish flag all the way up to this buying climax. And we saw our FTX low in an up thrust up here, okay? What's the 100-day moving average? Moving up. Where's the cloud the whole time? The cloud is green. For 90% of the time, the Ichimoku cloud is green. Finally, we start a distribution. Buying climax, up thrust after distribution test, compromise of the 100-day moving average. The cloud starts to turn red and is starting to move down. The moving average finally starts to go straight, slope straight. Bitcoin breaks out in November 2023. We then get a bearish retest, underside retest of the cloud in August 2024. This past summer, we got down to whatever we got down to. What was it? 50, no, 40, 48 or something. Rejected, down, all the way checked back up this past March, which I was watching and did videos on here saying we're at the juncture of the cloud and the 100. I'm expecting either a deviation rejection or a rejection. We got a deviation rejection. We got both, and the market moved up. And now we're coming back to the underside, checking back to the underside of the cloud that's red, and the 100 is sloping down, folks, okay? The character, this is really important. The character of what was going on here is 180 degrees different than the character of what's going on here, okay? And this also, let me get rid of all these drawings. What does that mean? That means that USDT dominance is undergoing a complex high time frame redistribution. And I've got the schematic up here, and we are nearing true markdown, the markdown phase, which I believe is next, which should send Bitcoin into true price discovery. We've come a long way off the lows, but this chart's telling me that true price discovery doesn't start until this floor here is breached, okay? This floor is breached, which we saw price discovery, and I'm expecting the same thing to come down here, price discovery, okay? Mind you, what the implication here is, on the other side of the coin, the implication is my targets could end up being very conservative, because all this happened, mind you, while the dominance chart I just shared with you was in an uptrend, right? Cloud going up, 100 going up. We're now here in price and clouds going down, right? The cloud's going down. We got the MA going down, and we're in a downtrend. Preceding what I believe is marked down in dominance. And so the implication on the other side, whereas everyone is thinking lower targets, here everyone was thinking higher targets, and the dominance chart looked like that. Here everyone's thinking lower targets or double top, and the dominance chart looks like what I just shared with you. Implication is this thing could go a lot higher, a lot further, a lot faster, a lot slower. I don't know. The timing is always difficult than people think. Now we couple that with, and here's the problem with only doing a Bitcoin analysis and folks that don't look at markets in general. I'm sorry, but you're staring down the barrel at one of the most intense V's down and recoveries that we've ever seen in markets, okay? And the speed in which it happened rivals COVID. What happened after COVID, right? Boom, boom, and then major move, okay? And how did Bitcoin do in that environment? We're now mimicking that same type of action, which I've been forecasting. I've been talking about. I'm expecting a V, nothing less than a V. I've been very clear on that. And so far, what do we have? We have a V. We have a V. And so same type of setup, right? Where we've reclaimed the 30-week and we've consolidated. And I've said for the last 2 weeks, I don't expect a meaningful pullback here. I'd expect, and consolidation here is warranted for multiple weeks, okay? Multiple weeks. I think the downside here is very limited, very limited. And I'm expecting whenever this consolidation has concluded for us to then continue in the direction of the trend. However, it's accelerated, right? Because this right here gets a lot of people out of position, out of the market. Liquidity's taken, and this is the fuel for steeper, higher, quicker prices. So SPX looks fantastic. All the markets look fantastic. The dollar continues to do kind of what we've been talking about doing. I've been talking about this for years and years, right? So when I started doing these videos, I pointed to this has been here the whole time, parabola. What happens after a parabola? We should know this, especially those of us that are into Bitcoin. The 2017 chart, right? What happens? We have an A wave, we have a B wave. This is a very complex B. and then we have a C wave down. And the C wave typically is the most violent. And what are we seeing play out in the dollar? 1, 2, 3, 4 consolidation. I said I expected a consolidation at the sign of weakness area. Whenever this concludes, the markdown for continuation, I think, is next. And what have we not done? The key is what have we not done here in the dollar? And that's reclaim the inside of this range, right? Look at this. This is not bullish at all for the dollar. 1, 2, 3, 4, 5 week counter trend rally, failure to gain acceptance back in the range, rejection on a big candle, bearish engulfing of 1, 2, 3, 4, 5 weeks. And here we are. So I don't know what happens next week. I know that the high time frame trend, in my opinion, is bearish. On yields, I've been saying this every single week. No change into my outlook on the yields. All this looks corrective. What happened last week? Remember I said, yeah, we reclaimed the 30-week, but this is bearish. 4 candles in a row. 1, 2, 3, 4. No, 1, 2, 3. 1, 2, 4 candles in a row green, but no power at all. Waning, weakening. Last week we came back. Closed below the 30-week. I think the highs are in for yields, and I think markdown is next. I think that happens next week. Well, next week or the week after, okay? And so nothing has changed. This is a complex redistribution, in my opinion, towards the end preceding markdown. U.S. oil, I can't remember the last time I did U.S. oil. I think we were somewhere in here. People were asking me about what I think about inflation or something. I said, here's what I think about inflation. Here's the oil chart. This is, again, a complex redistribution all day long. Parabola. A, complex B, right? And here we are, sign of weakness. Under the cloud on a weekly. 30-week sloping down. Doesn't mean we can't check back, right? At any sign of weakness, the market's going to fight and try to confuse the masses. So we could certainly check back up here into the 68 region prior to a markdown, but this is a bearish high time frame chart all day long. Unless the 30-week were to get reclaimed decisively and then you were going to get a breach of a cloud, that's the only way that this trend changes. And until we see that, the forecast on oil remains the same. Looking for $50 oil into the end of the year. That's it, folks. Hope you enjoyed that. Have a great rest of your weekend. Take care.